George of the jungle, strong as he can be.
Hi everyone, and thanks for coming into thecreditjungle.com today. This is George Anderson, and there has been, I think, a little bit of unjustified fear and irrational behavior. We've talked about fear and how that allows people to make some decisions that maybe are not as rational and as measured as they should be. I had a couple of clients within the past week and a half that withdrew their offers from a home that they were planning on purchasing because they felt that within 90 days there was going to be a housing crash. You know, that home prices were going to drop 10%, 20%, whatever, that there was going to be some cataclysmic drop in housing prices. And I just want to share the experience that I have from having started in the mortgage business in 1989. This has been my full-time pursuit ever since, so 31 years this year. We had similar things going on when the Gulf War broke out in 1991. We had the dot-com crash in Y2K around 2000, and we had the Great Recession of 2008. There were different factors in each one of those instances that created a result that is different than what we have today. In other words, you put in certain ingredients like easy money, high interest rates, an oversupply of housing, and all of those things, any one of those things can lead to a crash. But right now in our current market, we don't have any of those elements in our housing market. We have had very modest 4 to 6% stable, sustainable growth for at least the last 5 to 8 years. Okay, that's the first thing. The second thing is that there's a shortage of housing. The months of inventory of housing that's out there right now is approximately 90 days. That means that if no other homes came on the market, that everything that's available on the market right now would be gone within 90 days because there's that many buyers out there. There's more buyers than there are sellers. An equilibrium market is more like a 6-month supply of inventory. So that's where we are, and these numbers are national numbers. In Utah, we're even stronger than that. But the other thing is that the loans that people are getting, they have to really qualify for them. In fact, the underwriting guidelines right now are stricter than what they were 15 years ago. 15 years ago, it was easier to qualify for a loan than it is right now. And because of that, you have bona fide people that are buying a home because they really intend to live in it. They really intend to keep it as an investment property and to hold it for a while. And that's a much different scenario than when you have speculative buying, which is what was the case that we had in so many of the prior bubbles. So again, any one of the elements on some of these prior recessions, housing bubbles and whatnot that you had, they can be there and they can cause a panic in the housing market. But in the current circumstances that we have right now, it's first we need to understand that this is temporary. Okay, whether you believe that this is a few weeks or a few months, this is not something that is going to continue on for years. Okay, summertime, whenever time you think it is, the demand for housing is still there, and it's just building up behind the dam. And when everybody feels that the coast is clear, there's going to be a huge rush to buyers out there because the homes are still going to be in demand, the interest rates are going to be low, and there's going to be opportunities for that. So don't shoot yourself in the foot thinking that there's going to be some great opportunity out there if you wait a little bit. I think the opportunities are out there right now, and hopefully some of my wisdom gained through just experience. Honestly, school of hard knocks, I can save that for another story. But this is something that I think that somebody who is really a student of the market, who has been through these cycles and sees this, talk to your parents, talk to somebody who's been in the business for a long time, 20, 30 years. There's people that I know that have been in the real estate business for 50 years. And they're not so rattled over all of this. And I don't think you should be either. So go out there with some confidence and know that this is something that you can get through, and you're going to come out better for having some measured confidence and some deliberate action right now on the back end of this. And thanks for joining me in the Credit Jungle today. This is George Anderson, and I appreciate your time, and I hope to talk to you soon. Take care.